So sniper entries, you guys. Like I said, I want to thank everybody for showing up. I know you guys made some really good moves today. There were some really good moves in the market going on, and hope you guys were able to capitalize on those. This is our third educational series going over sniper entries tonight. If you guys missed our previous videos, the first one was on price action and candlestick formations. The second one was pretty much on market structure. And if you guys need a link for those, we can gladly drop them in the chat for you. You can also find them on our Telegram group and in Discord as well. If you're not part of those groups, be sure to let us know, and we'll go ahead and add you to those groups when we can. Me and Marcus, you guys can hit us up whenever. If you guys have any questions, concerns, you want us to look at any trades for you guys that you're currently in, or any setups that you're looking to get into, then by all means, you have our contact information. You can definitely hit us up, and we'll be more than happy to help you out. So getting into it, as you already know, me and Marcus like to teach top-down analysis. So top-down analysis pretty much comprises of going either from the weekly or the daily, sometimes the monthly. I really don't use the monthly too often, only sometimes. But for the most part, we'll either start at the weekly or the daily. So we're going to go in here, and right now we're on silver. I wanted to use pretty much a pair that nobody's really asked for in our live sessions. So I'm going to go ahead and mark this up right here. We can see a level through this area right here, about 2,500, somewhere around there. And you can see where these points have had major reactions from the market here and here. Through here, we kind of got faked out right here, but it's still a valid level, even though we did get faked out. And currently, we're having rejections here. So this is a valid level. We want to go ahead and mark that out. We can always adjust it as we drop down in time frames, because the higher the time frame you are and the bigger your area is, and these areas are marked in if you guys aren't able to pinpoint an exact support or resistance level, just go ahead and draw in a this rectangular box right here. You can find it over here. Third one down and rectangle. If you guys didn't know, you can save all of your favorite drawings. I put mine down here, but you can pretty much move them wherever. I like to have mine down here out of the way of price. And all you do is simply click on the right arrow and hit your star. And it'll show up as you add more favorites. So you can quickly access them. So here's this one right here. We also have another level down here, and this will maybe finish wrapping up our daily. If I can see anything else in here, hopefully you guys can see why I marked this level up. Down here, reactions here, and we had this long fake out down here. If we scale out a little bit, we can see where this wick ended up reacting from in the past. So somewhere around this area, and we've had a rejection here and some hovering around here as well. So here on the weekly, we drop down to the daily, see what we're working with. And our daily level, maybe we can adjust a little bit to coincide with these highs that we see on the daily time frame. So if we do that, then we'd also have to mark out, I'm going to move this up a little bit. We also have to mark out this level up here as well, because price struggled to get there, but this is a significant level on the daily time frame. I'm going to go ahead and make that a little bigger for you guys so you can see. And all this price action happened in between these zones. So this is the next high that we're looking at. I'm going to go ahead and get rid of these. So doing our top-down analysis, guys, trying to find a good entry point. And then we're going to go back a little bit in time, just a little bit. We have this area up here. We have this area right here where we've pretty much had 3 rejections. I'm going to show you guys where you could have gotten into as we rewind price and then play it back. I'm going to show you guys how you were able to execute a sniper entry when you're coming up on your zones. Because like I said before, for the new people that joined in, I explained before you guys hopped on that to be able to execute sniper trades or sniper entries, you need to have all of your materials handy in front of you. It means you need to have a good handle on market structure, which is your higher lows, your lower highs, all that good stuff. You need to be able to identify your candlestick reversal patterns, your chart formations, all those things. You need to be able to identify when price is either in an uptrend, a downtrend, or whether it's consolidating. Any entry that you do take, if you do want it to be somewhat of a sniper entry, then you're gonna have to have all of that material readily available for you. And just to make things clear, in case you have heard or in case you didn't know, there's no such thing as a sniper entry, okay? I want to say that one more time, there's no such thing as a sniper entry. There are good entries, there are great entries. In my mind, a sniper entry would be like you just caught the peak of a certain wick, like something like this where you caught it right at the top for a sell. Or even here, you caught it right at the top for a sell. All right. That to me is a definition of a sniper entry. You're not going to get sniper entries 100% of the time. Our objective in trading is to get the best possible entry that we can and be able to ride that position with confidence to either our TP1, TP2, TP3, whatever your target is. You want to be sure that when you enter your trade, you're entering that trade at the best possible position, minimal drawdown, if any at all. A perfect entry would be one with minimal drawdown and where you can also have like a tight stop as well, because then you're displaying that you're super confident, like you have the utmost confidence that this trade is going to go your way. Okay. So as far as having a sniper entry, you can get it as a zone. I mean, but at the end of the day, a lot of sniper entries are going to be on accident. Okay. Because you can very well wait. Like we drop down. Let's go ahead and drop down and finish marking up our chart. I don't want to get too much on the soapbox and, you know, kind of disregard the lesson. So we have our 4 hour right here. Actually, no, it's not 4 hours a daily. Drop down to 4. I thought I dropped down already. That's our other daily, level. Looking at it from here, we are somewhat on a rise as far as drawing in a trend line. Let's see if I can squeeze that in, or maybe if I can drop down a little further back here. See what I see. If it'll give me my trend line, thank you very much. So we have that as well. Okay. And just remember, guys, when you do take your entries, say we are on an uptrend, you can very well have a sniper entry off of a trend line or going up. Okay. So whenever you're at your points of support, resistance, trend lines, whether you're breaking out of a chart pattern or you see a certain candlestick pattern forming, then that's when you'll be able to formulate or execute your entry. Okay. So We can drop down. Excuse me? Hey, we're recording, man. If you guys have any questions, go ahead and drop them in the chat for me. I'm going to go ahead and mute everybody real quick. All right. So, yeah, if you guys have any questions, go ahead and drop them in the chat for me, and I'll definitely get to you. I just don't want any extra chatter coming on. Not trying to be rude or anything. I just want to get this information to you guys. So we can go back a little bit, and I want to emphasize on one of these entries as far as being able to get in at the right time and what you could have done and what you need to be able to look for when you are taking sniper entries or when you're trying to execute one, as far as your chart patterns, your market structure, and much understanding how the market moves. So I'm going to place this a little further down. So, common misconception is that the premium entry would have been up here on this reversal, okay? This point right here, I mean, yes, you could have entered there. You could have waited for this M pattern. It's slightly off, but chances are you would not have caught this drop if you weren't looking at it and if you weren't paying attention to your candlestick patterns, okay? What we like to preach is to wait for your candlesticks to finish forming and being able to wait until your structure breaks down, until an uptrend or a downtrend is over with, until a support or resistance line is broken, unless it's failed to break fully. Because a lot of times, as you guys see in the market, it will fake you out. So from here, we could have placed this a little higher just to give us a little more confirmation. So guys, remember when we do mark up our charts, when we drop down to lower time frames, we want to be able to line up everything, which is our support and resistance, trend lines, all that stuff. We want to be able to line that up with that current time frame. Okay. So as we come back, we're trying to look for our spot and waiting for this to load now. Come back. Here's our spot over here. Okay. So we have this right here. Okay. And we've moved our resistance line up a little bit to coincide with this previous wick. So, like I said before, you guys need to pretty much move your support and resistance line in accordance with whatever time frame you are in, to better line up with the price, so you can be able to make a more informed decision and know where your levels are, because it can really throw you off if you do not know support and resistance. So coming from here, we can see that we've come up and we just passed this level. Okay, we just passed this level. After this, we got a bearish engulfing candle. Now this would have been a nice entry to get into, but what we need to do is we need to wait for this candle to finish. And also, if we are expecting to go in a downtrend from here, if we're expecting a complete market reversal, once we come up here and we get this bearish engulfing candle, then we also need to wait until this uptrend line breaks. So price breaks this trend line, comes back and retests, okay, this trend line, which we ended up getting. So we have that now looking at price. So once we have price come back and retest this trend line, this move right here, we waited for that to happen. So we already have that confirmation, okay? We confirmed that that already happened. Our trend line broke and we came back down. Came down, broke this trend line, came back up, retested. Right here would have been an opportune time to get into this sell. So as we look at this, we can see that price was coming back up. So we're gonna go ahead and drop down to the 15, and we need to be able to find this spot once again. And that's current price. We'll come back a little bit and we will find it eventually. It'll pop up, man. So while we're waiting on this, are there any questions, any comments that you guys wanted to go ahead and throw in the chat that I can answer for you real quick before I can find this spot again? As soon as this pops up, I'm gonna go right back into it. This computer is being a little slow right now on price forming, so. Let me see what date that was so I can go ahead and find it, because this is getting on my nerves. Okay, would you have used that bearish engulfing as an entry on a lower time frame or only after it broke the trend? Okay, so as an entry, that bearish engulfing, you already know that we like to wait, okay? We like to wait for our entries. We like to wait for our candlesticks to finish. If we're looking for a complete market reversal, like it did here, I mean, we were bullish and then the market reversed and turned bearish. I don't personally like to enter long-term sells until some sort of trend line is broken, okay? When that trend line is broken, then I can go and look for sells. But yes, I would have waited for an entry on the lower time frame. I wouldn't just jump in to an hour time frame, entry. I would wait until I get some sort of confirmation down on, and you know what? I'm gonna find something else because this is taking too long as far as going all the way back here. I'm gonna find another entry for you guys. So, because I don't like going back that far. That was a really good spot, but I'm gonna go ahead and do this because yeah, that's way too far back in time. So we're coming up off our trend line. I'm just gonna take a trend line bounce one. And I'm gonna adjust this since we're on the hour now. And now we can go ahead and find another entry on this uptrend going on right now. I had to switch mouses. Everybody's having freaking, what do you call it today? Technical issues. Yeah, my Apple mouse then died, and I had to switch over to my other one. So it's a little slow right now. It's getting on my nerves. I'm used to this swift and this smooth capability of the Apple. So, but yeah, I got this aftermarket one, so just bear with me. So looking at this, we'll go ahead and take this entry right here, okay? This is a valid entry. This is a trend line bounce off of an uptrend. And when you ride your uptrends, this is how you ride them properly. You get your trend line, you make sure you're having multiple touches throughout. You know that the market is making higher highs and higher lows on the higher time frames, and it's pretty much riding this trend line. So if we take this entry right here, we see that on the 1 hour, okay, we can also mark up this little area right here, okay? And this is your consolidation, this right here. So we can probably do something like this to include that price, maybe include that wick a little bit. I might be stretching a little bit, but at least when we come down and if we are riding our trend line up properly, taking our entries off of certain areas, coming down here, we do know that this is some sort of a safe, like safety net in case price did decide to break this trend line. We can then look for it to give a bounce off of here. So we don't have to be scared or frightened or anything like that. If price decides to break, we just have to look and be careful and make sure that we're monitoring price so it doesn't end up breaking past this zone. That'll be our other area to watch. But in this case, it didn't move past. We had a good bounce off our trend line, and that's exactly what we're looking for. We're looking to ride this trend line as it's had so many reactions to it in the past. Okay, so coming up, we're taking this entry. On the hour, we can see a nice bullish engulfing candle. Okay, we drop down, we can also see if there were any other indications within that bullish engulfing candle that would let us know that it's a safe entry to go ahead and get into. So here, all of this action right here pretty much comprises that bullish engulfing candle, okay? So we came down, price was struggling to get past, well, you know where we're at. Price was struggling to get past this trend line, okay? This trend line right here has been experiencing a lot of wicks coming through it, and as soon as we broke to the upside, we have this right here, which is a final touch of that trend line for more up, okay? So as soon as you start coming down here and you see this wicking up, you have your confirmation, and this is, say that's 5:45, and then this one's the hour. Your time frame confirmations, like I said, coming off of this bullish engulfing candle, and that's at 4. I think I was looking at that one. Nope. 4 o'clock, 3 o'clock, 4 o'clock. Okay. Up back down to 15. Make sure we are there. Make sure you guys some accurate info. Trying to make sure yeah, it was around there. Okay, cool. So you're bullish engulfing after this wick printed right here, and that would have been a good indication, especially when this next candle starts turning green. You have a confirmation of a bounce off of this trend line on the 15-minute time frame. Hold on a second. Okay, sorry about that. So we're coming off of here. This wick would have been a nice entry to get into, especially after this candle started turning green. That's your entry right there. As far as a sniper entry, if you're looking back at this, then you're not gonna know. If you look in hindsight, of course it's gonna look like, oh, that was a good entry to get into. But you always want to make sure that right here is an aggressive entry, okay? This wick, after it was created, that was an aggressive entry. Once price came back up to here, it came back down and pretty much kissed this trend line on its way back up, and then it creates this wick. That's an aggressive sniper entry, okay? Because you're getting it right off of the trend line. A safer entry and an entry that we teach is to wait for your candlesticks to finish forming. After this candlestick finished forming, it created what? A piercing line. So after this piercing line forms, then that gives you extra confirmation to go ahead and take your buy, okay? You can place your stops below this trend line because at this point, you already have confirmation that this trend line wasn't being broken, it was being well respected on its way up. And you can also tell that by looking at different time frames. On its way up, it just respected the hell out of this trend line all the way up. Each bounce gave us more of a push up. So when you come to this one, it gives you a little more confidence, gives you a little more confirmation that when you go ahead and enter your buy, then you're pretty much set, okay? Especially if it ends up getting past here. So this is a good buy to go off of. And the thing about sniper entries, like I said, you have to know your candlestick patterns. You have to know your market structure. You have to follow your trend, and that's one of the most important things, is to follow the trend. This is a really good example of actually following this uptrend. Okay, if you're looking for a sell coming through here, then you have to wait for market to come down, retest, and go back down. You're following this trend all the way up, then you're most likely going to be looking for buys. So you shouldn't be looking for sells at any point. Hold on a second. So this was one of your sniper entries, okay? Going up, you see that price broke here and we didn't get a retest, okay? If you were able to hold this down here, then yes, you could have rolled that up looking for sniper entries coming through here. Coming back down here, we already have our levels marked up. Price is revisiting this area right here, okay? So we're on the hour time frame right now. We already have our higher time frames marked up. We know our targets. We know the trend that we're in right now, which is an uptrend coming from here. And we've already broke. And what we teach is a break and retest. We're pretty much on a break and retest right here, okay? Price broke up, came down, retested, and went up some more. So when you're looking for your entries, if you are pretty much hell bent on getting a sniper entry, then you need to pick great spots within the market that you can ride for a little bit, okay? We always preach to go off of trend lines, support and resistance, all that good stuff. Do your break and retest. It is difficult to get a sniper entry off of just a break of a trend line because you know that at some point it's going to come back and reverse, okay? Come back, reverse, retest that point that it just broke, and they can either continue in that direction or just do a market reversal and just blast past through, okay? Something like this where you're having your higher highs and higher lows, and your higher lows are really, really small, and price is just pushing up, and then you see something like this, then this break that you had that you didn't get your retest for, you just have to let this go. You cannot get a sniper entry off of here. You could place maybe a buy stop at this level, okay, because you see that price is heading up with strong bullish momentum. But at the end of the day, I mean, you can't qualify this no matter what time frame you're on. If you go in there with that mindset, like I'm gonna place a buy stop right at this level, right at 18.86, and then you drop down to your lower time frames, and you've already done your analysis, and you're looking at it like, okay, my buy stop's already placed. It's gonna come up, come back, maybe retest this area. You gotta remember, just because this line is here doesn't mean that price is gonna immediately react to just this line. All of your support and resistance, trend lines, all that stuff, you have to look at as zones. So if you did have this marked out as a zone to pretty much coincide with these highs and this pullback like this, price is reacting from this area and this area right here. So coming through here, unless you had this area marked up back here, then you wouldn't really know that price is going to break, retest right there, and not come all the way back down to your level and then take off from there. Okay, if you did, and we can just look at it from here. If you did, what did price create? Price created another Pearson line after a break and retest. Okay, this right here, I mean, somebody like me, I would have missed this because I'm not drawing in my zones this thick. Okay, especially on lower time frames. Lower time frames, I like to have them a little smaller, but for the most part, on lower time frames, my zones aren't going to be that thick. If you're that type of person, then I mean, more power to you. You could have very well caught this, and for your sniper entry, you could have waited for this candlestick pattern to go ahead and form. Okay. If you didn't end up setting a buy stop here, which you would have been in hella profit if you did, that's not a sniper entry. Okay. Sniper entry is based off of analysis, based off of candlestick formations, and it's based off of market structure. Without all those three, then it's not really considered that. Because anybody can go back and look at your entry point, be like, dang, that's a good entry, but you don't know how long that person was in that position for before price decided to go in their favor. And you look on their MT4 and it may look like a sniper entry, like they got in at the wicks and everything, but you don't know how long that was forming, you know? So when someone tells you, hey, I got that sniper entry, like, I mean, you got a good entry, okay? I mean, in my mind, there's really no such thing. So, but looking at this, you can see that price created another Pearson line. And if you guys saw other videos, then you should know that these happen all the time. Pearson lines, dark clouds like here, just to come back and force the market to come back and retest this area that it just broke. Okay. And these are the opposite. They're both reversal candlestick formations. So off of here, this would have been a great entry to take, especially after this finished forming. Okay, after this finishes forming, and especially if it's a flat top. The flat tops are flat tops and bottoms. If you guys didn't know, they're great indicators for a continuation of the move that's currently happening. More often than not, they're going to continue going in that direction, even with little pullbacks. But a nice full flat top or flat bottom candle is going to give you a really good indication that it's going to keep going in that direction. As you can see here, the closing and opening of both of these candles are pretty much equal. So you can look at this candle as a direct continuation of this candle. So after you get your pattern, boom, you hit your buy, you got your break and retest, you're on a strong uptrend, you got your candlestick formation, and you're good. You place your stop below the zone, or just to be safer, below the previous higher low, and you ride that up. Okay. If you're able to get that, then yeah, you would have been all the way up here. But the point of a sniper entry is pretty much to be able to get in the best possible position to be able to take a trade with minimum drawdown. Okay. A great way to do that, I've stressed this to a couple people as well. We're going to be doing it on future Zooms, is how to correlate your trading view chart with your MT4 chart. Because your MT4 chart is a lot more accurate on price. I've been scalping. I've been scalping for a little under a year now. I really didn't start scalping until the beginning of this year, when I got out and then sitting around, not pretty much nothing to do, but all I was doing was trading. And I found out that I was really good at scalping. I'd sit here and I watch. Okay, I got my finger on the buy. I got my finger on the buy or sell. I'm looking at the candles form on my MT4. I'm looking at them on TradingView. Okay. Since your MT4 is directly linked to your broker, they're going to spit out price faster. You're going to be able to see your candlesticks forming faster. The money goes up and down faster and all that. And you look from your phone or MT4 and you look over to TradingView, sometimes between sometimes and half the time, it lags, like the price lags. Okay. Something will happen on MT4, and then I can look up on my screen at TradingView, and then it's happening. Like I already saw it happen, but then it translates on TradingView like maybe a second or a half second later. And when you're scalping, that's no good. You need to be able to see everything like right there. So I think my scalping habits pretty much kind of converted into my regular trading. I don't like trading directly from TradingView because I know that price is lagging a little bit. Like if I'm hovering in my entry and I'm looking at TradingView, if I'm hovering between in profit and out of profit, you know how your screen flashes red to green or red to blue. I can see that on my screen happening before it happens in TradingView. So when you're looking for sniper entries, something like that is very important to be aware of, just to know that TradingView sometimes lags behind in price movement. So, but something like this, yeah, I would consider, like I said, sniper entries, waiting for your break and retest, waiting for your candlesticks to form, get in. That's like textbook picture perfect type of entry right there. Okay. It's not necessarily catching it at the bottom or placing a buy stop right here, waiting for a price to go past it. And then you look up at your, you look up at your MT4 if you have it marked out or not. And it pretty much coincides with, like, your entry coincides with previous market structure. And you look at it, you post it or whatever, and like, oh, dang, sniper entry. Like, nah, bro, that was a buy stop. You know what I'm saying? So, you ain't fooling nobody. There's nobody that's going to get a perfect entry like that. If you can sit here and watch it, then, I mean, I'd say maybe 5 out of 100 times you're going to be able to get that type of entry. But you want your entries to be based off of everything that you've already learned, everything that I've already explained. That right there is going to be a sniper entry. Okay. So this next one, we're going to go ahead and draw this out, and we're going to keep this big old area. Okay. So entry like this, you can pretty much see that we have on the 15, and you know what? I'm gonna drop down to the 5 just to show you guys, because we already have everything drawn out. So something like this on the 5, you have to be careful because there's a lot of price movement, and there are a lot more candlesticks than there are on the 15. You gotta remember, about 3 of these candlesticks make up the 15-minute time frame when you're on the 5 minutes. So you gotta be aware of the time frame that you're on. And after you place that trade, you have to be able to, one, I wouldn't suggest watching it on the 5 minute. Okay. If you're going to scout or if you do your entry, don't watch it on the 5 minute because you're going to get freaked out by all this little stuff. All these little candles, especially if you're on a big boy pair, and you're not used to the price fluctuation, you're going to get freaked out. Okay. All that stuff about market structure and break and retest and all that stuff is going to go out the window if you're on the 5 minute, because it used to happen to me plenty of times. That's why after I place my entry, if I'm on the 5, then I have to switch over to either the 15 or the 30 to be able to follow it with confidence, because especially after it breaks out all of this, all of these wicks, you gotta remember, and this is just a 30 minute, all of these wicks, it has all this price action filled in on the 5 minute. So you just have to be wary of that. You can be like, oh, it already retested and then it goes up and then comes back down. It's like, oh, it's retesting again. All this price movement, especially if you're over leveraging, it's gonna really, really mess you up. Okay. So something like this, what you want to do is, yes, you wait for your break or your retest to come back down. Okay. When we're coming down, you guys already know when we're approaching a zone from either side, it can either break or it can bounce. All right. So we already know we wouldn't be placing sell stops down here, expecting price to come down and break this. I wouldn't be doing that personally. I don't suggest anybody else does, because price can very well come down, fake you out, and then come back up. You already placed your trade. You're confident in it. You see it's coming down. Come back later and you didn't hit your stop because price just came down and bounced off of here. All right. So looking at this, say we were approaching this on the hour time frame, right? And you see prices coming down. You already know that it's either going to break or bounce this area. I'm going to get rid of this real quick. You already know that price is either going to break or bounce from here. Okay. So you come down, you see your wick. Okay, cool. So that's a good indication that price is going to bounce, but you still need more. And I'm going to go ahead, and we already know what happens, but I'm going to do this anyway, just to show you guys. And I'm going to reduce the speed a little bit just to show you guys how fast the price movement happens when you're on the 5 minute. We get rid of that right there, and then we drop down to the 15, and we're getting this right here. Okay, cool. Drop down to the 15. This price action is making up that hour, and yeah, okay, cool. We're right at about an hour, right at about it. So we see this happening. It's like, okay, we're gonna go ahead and look for buy opportunities. We already have 3 wicks coming through here, and now we finally have a bullish candle. We see that on the 15, we drop down to the 5, and we're getting this right here. Okay. Now, what can fake us out a little bit is seeing that once price came past this little zone and it's rejecting it on its way down, we could be thinking that price is going to bust through this lower zone right here. because it's already broken structure. It's already not broken structure, but it's already continued its previous structure. We had some equal lower highs through here since we have been on a downtrend coming down. We had our lower highs and lower lows coming down. We've had our equal lower highs, and then we had descending higher lows coming down. Each high is lower than the previous. So we come down, breaking these equal lower highs, come down, make another lower high or a lower low. And we come back up here, another lower high. But this lower low is a little higher than the previous one. This lower high is still lower than this one. So if you're scaling in, especially on the 5, this is where it starts to get tricky as far as where to make a decision. Something like this, yes, it can get confusing if you're strictly trading off of lower time frames. I would suggest moving up and getting a bigger picture of what price is trying to tell you that it wants to do. I personally won't come down here if I'm seeing, I won't drop down to the 5 like this if I'm seeing wicks playing out, because there's been plenty of times where I've been faked out, where I didn't hold my position and I was scalping and I ended up being right the first time. Like if I get in for a buy around here, not even looking for a sniper entry or anything like that, just feeling a bounce, and coming off of this, I'm getting my my price action right here. I'm not getting past this zone. I wick past this zone, but then I get this bullish engulfing a little bit. Then I can kind of, my bias is kind of changing. So if I get in for a buy down here and I'm still in it after, what's that, maybe almost an hour, then I'm like, okay, I'm getting kind of antsy. I don't like holding my positions that long and they're either a little bit in profit or not in profit at all, especially when I'm scalping, because when I'm scalping, I need to either be, immediately in profit within like 5 or 10 minutes, or I need to be either holding or closing my position. I need to be doing one of the 3. Either I'm in profit or I'm not, and the position's going my way, or I'm out of the trade. So from down here, all of these are pretty much forming these wicks on the hour and the 30. So you have to be wary of that. Just because you drop down in the 5 minute doesn't mean necessarily that it's going to increase your chances of getting a sniper entry. Maybe the 5 is a little too low for you. Okay. Maybe you need to bump up to the 15 so you can get a better picture of what's going on. All right. So we see these wicks, and yes, price struggled to get past this area right here, but we already know it goes up. But just for the entry purposes and just explaining the process, I'm going to bump this up to 1 candle. So we get that. So price came down and pretty much tested this zone array. So it's not ready to go up. Maybe your bias is changing a little bit. You're seeing a lot of red candles, but you're also seeing a lot of wicks. You're not really sure which way it's going to go. So that's why you cover both positions. But your bias is a bounce still, okay? Then you get this next candle, or these next 2 candles that form, like, okay, well, I broke this, so maybe it's going up now. But hey, I've been taught that I'm not going to go into a buy until price shows me what it wants to do, and not until price is going to break some sort of down trend line. Okay. So we always cover aggressive entries, and we always cover safe entries. This right here, anything below this trend line, if you're in a situation like this and you feel like price is going to go up on you and you feel like you're right and it's going to keep going up, like you just feel it. Like there's no way to know for sure. There's no way that you can know that price is going to go and blast past this trend line. For all you know, it could be coming down here, give another bounce out the trend line, and eventually come back down here, or it can play around in these areas for a longer time. Okay. What you guys have to realize is that when you do see people posting like all these, sniper entries and everything, like I said before, you don't know when they got in. They could have got in when all of this was consolidated. They could have got down here at the start of this consolidation. Like right when it came down here and it gave this little wick and came back up and gave this little wick as well, they could have got in down here. Like their entry point could have been right here, okay? And they could have got into that position when it first came down, all right? When it first came down, and yeah, if they would have got in when it first came down and then started wicking up, as soon as it started wicking up, they could have gotten to that position. Yeah, that's fine. They could have been in profit. Then it came back down, and they're hovering in and out of profit right here for almost what's that time frame? 3 to 4. So probably for almost an hour, they're hovering, going in and out of profit. And then after this, yeah, their initial analysis of this of silver bouncing from this area, yeah, their initial analysis ended up being right, but they didn't get into that position on this last bounce. So you never know when you're looking at somebody else's stuff. So that's why I say I just don't believe everything out there that you see. A lot of people out there are clout chasing and, come get these sniper entries and stuff. Like, okay, cool. That's fine. We don't know when you enter that, but I don't buy into the hype myself. I never did. I know all the gimmicks and stuff people throw out there. So just make sure you guys aren't falling for this type of stuff. Although, sniper entries, like I said, they're not really important. What's important is a safe entry. There are safe entries and there are aggressive entries. If it ends up looking like a sniper entry, then so be it. But chances are you're not gonna get one, because there's no way that you can know that price is gonna go up from here, especially say you get in from down here on the 15-minute. Okay, let's just say you got in after this last bounce. You see that price has been bouncing off of this, so one, that's another confirmation for you that price can't break past this. And then you start seeing a bullish candle, and then you get in. I'm going to get in right here. If this next candle is green, I said that plenty of times to myself when I was scalping. Like, if this next candle is green, I'm buying. Even if it opens up green, I don't need it to finish. Okay, I'm buying from there. I want a good entry off of this support. I'm not waiting for it to finish. I'm scalping this thing up to, this level right here. And once it gets here, then we'll see what happens after that. But for the most part, this is my entry. This is my target. If I see anything else, if this next candle eats up maybe probably about half of this candle, then I'm gonna get out. If it doesn't, then I'll stay in. And those are the rules I used to set for myself when I was scalping. So I'll tell you right now, it's not gonna work 100% of the time. There's been plenty of times where I've done the exact same thing, and I get in for this candle, I see it coming back down, and yeah, it's coming back down below my zone, and then this next candle opens up red, and it comes all the way down here, eats up half of this candle, then I'm like, you know what, I'm out. I had like, I don't know, $70 up here. Now it came all the way back down here, ate up half my candle, and now I got like $20 I'm getting out. And then price just closed and just takes off where I was at. If I would have just held my position, then I would have been fine. But you have to be wary of the time frame you're on and how fast price is moving. When it comes to good entries like this, you want to be able to hold those. Don't want to look at price too much, especially if you can't handle looking at the candlesticks as they form, if it gives you anxiety, if it pretty much puts you at unease, then you don't want to be sitting there looking at the candlesticks. You get a good entry like this, which can be, I guess, considered a sniper entry, especially if you got in after this last bounce. Then yeah, you can set it and walk away, because this next candle printed a bullish engulfing candle. Then we have our continuation candle. Even though we did have some rejection off of this little zone right here, we ended up getting past it, okay? So aggressive entry would be anything below this downtrend. Anything below here is an aggressive entry, especially for a buy that you plan to hold, and your target is beyond this trend line and maybe to these levels up here, which we all know it ends up doing anyway. But like I said, this is an aggressive entry. This right here would be, I mean, you can consider that a sniper entry. I'll go ahead and dub it that, because you waited for your last touch, you waited for your wick to come up, you waited for your green candle to start printing. Even though you weren't sure, you just had a hunch that it would happen, okay? And it ended up happening your way, all right? So as we come back here, we come past here, any entry that you take that is going against the trend is going to be aggressive. And depending on what type of trader you are, if you like to take risk, then it ends up working out for you in the long run, especially if you're able to hold, okay? So let's play this out. I want to see where, okay, cool. So safer entry right here. You broke your trend line. You guys just saw it. We always preach break and a retest for more up, okay? That's the safer entry. Your aggressive entry is down here, okay? The proper way, well, not proper, I'd say the most ideal way to trade something like this is if you are aggressive, say you did take this aggressive entry, okay? You can hold it and expecting a pullback at some point once price breaks this trend line, okay? Once price breaks this trend line and struggles to go any further, then you can go ahead and mark out your next zone that it reacted off of, which is right there. You had this consolidation in here, and this is the start of your trend line. You had this down move from here. You had these wicks back here, so this is a good area for you to place after price forms. And you know that's the next area that price needs to break to continue up. So you have your entry down here, and this is almost like picture perfect, with a little bit of a risk and a little bit of luck, okay? You took your entry down here, came up, you caught what? And this is silver. So yeah, you caught a lot. It's a pretty good move on silver. Wrote it up, you start seeing some rejection out of these areas right here. So you go ahead and either close your position, or if you have the nerve, you understand market structure, you understand that a break of a trend line is going to result most of the time in some sort of retest to that trend line for a safer entry. Now either do that, or you can close your position when you're up here, expecting price to come back down here. When you close your position, you know that, okay, I'm gonna ride silver, wait till it comes back, retest this trend line. If it comes back and retests, I'm gonna go ahead and take it up. I'm gonna get another entry in here, I'm gonna take it up. I could have very well held this, but this move from here to here, this could end up being like $200. You wanna take that 200, then take it. That's your move for the day. If price reverses and comes down and doesn't retest this trend line and it keeps coming down, guess what? You're good for the day. Like, you just made your move, you made this up move, price decided to reverse from here and drop down. There's no way that you could have known that price would react from here if you didn't know that we wait on your break and retest of your trend line. Okay, that's why I say you have to know your market structure. You have to know how price moves. You have to know the safest possible entries to take. So while we're on here, as we're coming up, you see price is wicking down through this trend line. That means price is struggling to break it. So we're keeping an eye out for it. What we can also do is go down to the 5 minute. Okay. Once we're on the 5 minute, we can see that these 3 candles had a hard time getting back through this trend line. So that's a good indication that price is going to keep going up and it's going to bounce from this trend line and you're going to get your break and retest. Okay. So from here, let's just say you decided to place your entry after this 5 minute candle finished forming. Okay. Let's just say. So you have that. Now, as far as a sniper entry, you don't know whether or not that's a sniper entry yet. Okay. But you're banking on your break, your retest, your price action right here, and your wicks going on. Even though this bearish candle is a little bigger than this bullish one, it still came down quite a bit and then rejected really quick. Okay. If you're on the 5 minute, then you can see this happen. You can see the momentum shift. I don't know how this candle ended up forming. It could have came down like real slow. And then once it got down here, before it started closing, it could have shot up real quick. You know what I'm saying? Like you have to pay attention, especially when you're on the lower time frames. You have to pay attention to candle momentum. All right, the price at which the candles form, or the pace at which the candles form. This could come down real quick and then come up real slow and hover and do all of this mess. And at that point, you're like, I don't know what it's gonna do. You see that it's struggling to break this trend line. Okay, so your bias could be a buy, but then it could get all the way up here and then shoot back down here real quick and then creep up again. Okay, if you've scalped before, then you've seen this happen. It happens all the time, especially when there's a change in the market, where it can be the start of the New York session after the overlap time between London session and New York session. It used to happen all the time when I used to get up early to scalp for US 30. I used to get up at like 4 and pretty much just scout and see what's going on. I used to see this all the time. The candles will fluctuate a whole lot faster during those overlap times, going into new sessions, and whenever there's news coming out, like high impact news, your candles will fluctuate a lot. So for my time, I remember, I think around like 7 or 7:30, I wouldn't trade, because at that time it was the overlap was transitioning to just strictly New York session. And there was a period of like maybe 15 to 30 minutes where price was just fluctuating each way, especially on the 5 minute and sometimes the 3 minute as well. I just stay out because I don't know what it's going to do. Okay. The whole price, pace, momentum, you need to be aware of that. So if you're able to see this, then yeah, you can make a better judgment call on whether or not price is going to come up from here. If you place your entry from here based off of these wicks and price momentum coming down and failing to break this trend line, then you could be able to make a better judgment and go ahead and place your buy. So we'll see what happens after this. So that right there, right now, of course, what does this look like? It looks like a sniper entry. Looks like you got in right at the bottom of that body, right after this wick finished playing out. Because as you guys saw, I want to play that back because that was crazy. That was a crazy amount of price action. I want to slow it down a little bit. So we can see that that candle, it had a big wick up here, and it had pretty much a full red body down here. Okay. You know, keep in mind this all happened within 5 minutes. We're on the 5-minute time frame. Okay. I'm gonna do it again just in case you guys missed it. I want you guys to watch because this is what I mean by momentum. Boom. Okay. So this candle right here, as far as it opening up, okay, we have no idea when we're looking at it how it's finished right now. We don't know whether or not price came down first and then shot back up, or whether price came up, it came back down to create that long wick you saw, and then finished like this. Okay. When you're doing these, that's why I would say it's important to wait for the candles to finish and also pay attention to momentum. If you're on these lower time frames, it's gonna really accelerate how you pay attention to the charts. Everything on the lower time frames is a lot faster. You have to process information at a higher speed, and you have to be able to control your nerves when you're seeing price play out in front of you, whether or not to hold that position or to go ahead and exit that position. So this is a 15. This is what 15 looks like. I'm gonna do this and see how this 15-minute candle played out and see if our nerves can handle that one a little better. So it pretty much did the same thing, okay? This right here, looking at this trade, if you were able to trade this break and retest and you were confident in your analysis, you were confident that, hey, I got my break and retest. We're coming off a nice bullish run that had some rejection up here. It reversed, came back down, gave this trend line a retest. Everything is set in perspective. All your parameters have been met. Then after you see these wicks forming around this trend line, you're knowing that price is failing to break it. So you go ahead and set your entry, okay? And you see what ended up happening. Price flashed down. It came all the way down here at some point. So that's not that's not considered a sniper entry. Doesn't matter if it started up here, then came back down, and then all of that. Looking back in hindsight, yes, because your entry is below these bodies and above these wicks. So it looks like you got in right after this last wick printed, but we all know that's not the case. So, like I said, the whole point and the whole, I guess, I wouldn't say myth because it does happen, but the whole idea behind having a sniper entry is minimum drawdown, if any, and being able to hold your position to your next target and basing your analysis, basing your entry off of everything that's already happened. All your parameters have been met. You got a safe entry. It's pretty much based off skill. I would say that this right here, this entry down here, it has some skill in it because you are trading off of a bounce, and especially on the 15-minute, you are trading off of a wick coming up and pretty much instinct, like, you know, or for lack of a better term or a lot basic term, is a guess. Like, I think it's going to go up after this, so I'm going to buy. Simple as that. And it did, and it kept going up. Okay. This one down here is more based off skill because contrary to this one, there was pretty much no drawdown. The open and close price of these candles are pretty much identical. So if your entry was down here, this candlestick opened up green, you say you're going to buy if it turns green, and it did, it ended up going up and it kept going up, then yeah, your skill comes into play when you can identify that price is coming down to either break or bounce off of this level. And you're getting wicks on the 15-minute looking at this level. You say to yourself, if I get another wick, I'm buying. Boom, hit buy. As soon as this green candle opens, price just shoots up. Outside of your trend line, you already know once it comes back, I'm going to look for another buy opportunity because I've been taught to to buy off of a break and retest, buy or sell, or enter a trade off of break and retest off of a zone, trend line, or support and resistance. So that's what you did. It ended up looking like a sniper entry on the 15 and on the 5. But we all saw what happened when I don't want to say rewinded. When I rewinded price, that price flashed all the way down here after this. So what you could have done as well is you could have waited. You'd be like, you know what? This break or this attempted break of this trend line is not enough for me. Okay, I want at least another break. And you know what? A lot of people that set those types of rules for themselves, especially if they are experienced and they've seen a lot of movement in the charts and they've accumulated those hours in chart time, then they can be able to read price momentum and pretty much going off of somewhat of a guess or somewhat of a hunch, because we all know there are some aspects of luck in trading. Okay, nothing in trading is 100% skill. There is some luck involved. Part of that luck is being able to hold out on your position and having an educated guess that price is going to go in your direction. And to attribute to that guess and for you to be able to do that, you have your risk management. So you have your entry point at the green line, okay? You know you already broken retested this, now you're going up. You can have your stop maybe down here, just in case price decides to go a little further. And you have your TP at the next zone after your break and retest, okay? You had it here, like, oh, I'm gonna place this buy, and I'm sure that it's not gonna come back all the way down where this wick was before. And you just mess up. You get stopped out on the next candle, and then it takes off. So being able to know where to place your stops, where to place your entries at, that's part of your analysis. That's part of the skill that you've accumulated through all your studying and through all your experience that you've seen in the market. So you know to be able to place your stop a little lower. And once it comes up and your analysis is pretty much right, you're right on the money about the move, bouncing off of this trend line, taking it up, and you can move your stop and profit as it goes up. As far as the sniper entry portion, there's luck involved. Okay, it's not, sniper entries are not skill based, because there's there's always some way that some sort of luck is involved. All right, so from here, like I said, you're coming up, boom, you hit that. Looks like a sniper entry, sure, but we all know it's not. Okay, but nevertheless, you were right in your analysis, came down, boom, hit your trend line, took off, hit your zone, you're in the money. So I'm gonna go ahead and play this out. And actually, I'm just gonna stop this. So we've had a couple pretty good examples of how to be able to place sniper entries. We all know that sniper entries are just a term that's used for a pretty good entry. Okay. I don't mean to bust everybody's bubble, but I'll take a damn good entry over trying to get a sniper entry any day, because I know that I can. If I get a good entry somewhere on a zone or a break and retest or something, then I know that I'm going to place my stop in a pretty good area, so I won't end up getting stopped out. I want my entry to be as close to my zone or my trend line, whatever I'm taking that trade from. I want it to be as close to that as possible. I don't want to be putting in an entry like all the way up here. You know what I mean? Even though this did play out, you don't want to do something like this. This is what inexperienced people do. Okay, they wait too long to enter the trade, especially on the 15-minute. I mean, yeah, it ended up playing out, but I would attribute this to something like, oh, is it too late to get in? Like 20, 30 minutes after, you know, the entry price for that trade has already gone by. Okay. Because like I said, there are a lot of aspects to trading, and luck is a big part of one of them. Okay. Luck is a big aspect of trading. And without it, I mean, you can't base trading straight off of skill, because it wouldn't, I mean, I wouldn't say it wouldn't be fair, but a lot of us would not be profitable, like, at all, until we really, really learned and got this skill down. So the luck aspect of it, yes, it does play out. It is a big part of trading. But something like this, an entry up here on the 15-minute, past this, maybe past this, but like I said before, the way we teach, man, if we have this up here, I'm going to change this. If we have this up here, then yeah, going into this trade, knowing that, hey, I got some bullish, I have some bullish momentum. Okay. If it comes down and I see it coming back up and turn green, then I'll get in. If you're sitting here analyzing your trade and kind of mapping out what you want to do, like, if price does this, then I'm going to do this. If you're doing that, you're properly mapping out your market structure. You know what's going on. You know this M move already played out coming up here, and you can identify that. You see these wicks going on down here. When price comes down and completes this M move, you see that price is wicking out. You see that you have your morning star formation right here. You see prices going up. You see prices having bullish momentum, especially after this candlestick pattern prints. You have a nice bullish candle coming into your area. Chances are price isn't going to reverse from here, especially with this candle being so close to it and the body closing out so close to your level. Chances are price is going to break through because you have that momentum. You're able to identify all of this stuff. Then I can be like, yeah, that's a skill move right there. Okay. Only after you identify those things will I consider a move like an entry from here. I would consider that a good entry for me. Okay. If you don't know any of this stuff that just happened and you're late to the party, is it too late to get in? You don't even look at your chart. Okay. And you're asking somebody else, or you're taking the signal and you just hit buy, and it just so happens that your entry point ends up being right here, then no, that's pure luck right there. Okay. That's pure luck. You're like, oh, I'm going to place it here. I'm going to set my, I heard that, I should set my TP probably 20 or 30 pips not my TP, but my stop loss below the previous structure. It might. I'm gonna look at my MT4, see all these wicks. It looks like it might be there, so I'll set it below there. I don't know where, but I'll just put it down here just in case. And I'll set my TP. I'll go for 20 or 30 pips, and you just do that, and your trade ends up working out. Then that's all luck. Okay, that's not skill at all. It just happened to go your way. That's what I mean by there are certain aspects of trading, and luck is definitely one of them. Things like that happen all the time. I used to be that type of person, like especially when I was starting out. Like I was the king of taking signals, man. Let a signal come out. I'm copy pasting that joint in my MT4. I get the notification. Boom, cool. Boom. I don't even look at the chart. Copy paste, copy paste, copy paste. Boom, gone. I let that joint run. I'm in the trade. As soon as I get the notification, like 10 seconds later, I'm in the trade, got parameters set. Boom. I thought I was the man. Like, yo, look at this. Boom, boom. Didn't know what I was doing. Okay. No type of skill or anything involved. Just copy paste king, man. But something like this to get your sniper entries, like I said, this right here, I would have considered that one because of all the analysis that you put into your markup before you took that entry. And you could have waited for a price to come down a little bit, and you could have told yourself, like, hey, as soon as price comes back up, if price comes back up from here, because at one point this candle was red, okay? And if you've watched charts long enough, then you know that as these candles are forming, you know that all your wicks, especially ones that are to the downside, like of this one, and you got a little more up here, at some point this candle was green. That's where this wick came from. So at some point this candle was red. So if you're sitting there telling yourself, okay, I'm expecting price to go past this point, or this high point that was just created. Price comes down, I'm going to look at it, I'm going to wait. If it ends up turning green, then I'm past my zone and I'm getting in. Okay, that's an aspect of skill. That right there, I would consider a sniper entry because of all the previous analysis and everything else that happened in the past that can contribute to your entry point. Okay, not just setting a buy stop here and, oh, yeah, it's going to go. I can look at it, it's going to go. No, you hit your manual entry right there. Soon as you see it cross, boom. Soon as you see it turn green, boom, you're in there. You ride it up. You take your profit. When it starts to peak out, boom, that's a sniper trade right there. That's what I consider. And that's only if you got in late. If you got in down here, that's even better. Okay? This one is even better. And this one would also require some aspect of luck. But for the most part, you already know what happened back here. You're getting your wicks on the 15. You're looking at this. You're seeing your wick come up. You see your doji print. So you're like, okay, if this thing comes back down, wicks up, and starts turning green, then I'm getting in. And that right there can be considered a sniper entry as well. But there's also an aspect of luck to it because this candle can very well play around here for a while. It can play around in this zone or between this zone and this point right here before it eventually took off. It can come up, it can come down, it can do all this stuff before doing that. You would have had no idea that as soon as you entered it, that it would just took off. And this next candle would have opened where this candle closed. So that's the aspect of luck that I'm talking about. But it's also based off of skill. You're not just entering a trade blindly just because it's rejecting off of a zone a couple times, okay? Because we all know that price does what it wants. But you have to be able to identify, like I said, these candlestick patterns. You have to be able to mark out your zones properly. You have to know if you're in a downtrend, uptrend, whether you're consolidating, and pretty much maybe have some aspect of luck to it, especially if you're taking an aggressive entry where you're entering a buy before it's broken the downtrend. That's an aggressive entry. This is more, I would say, technically it's more of a safer entry because it is a break and retest. But we all saw what happened with this candle when it started forming and it came all the way down here, entering, and you're basing your entry off of this previous candle. Okay. So we all saw what happened. But like I said, that's why you place your stop below previous structure or 20, 30 pips below, and you just let it run. If you're wrong, you're wrong. You take it, you take the L, and you move on to the next setup. Okay. So, but yeah, I think I've pretty much covered sniper entries on here. Is there any questions that anybody has? Marcus, if you have anything you want to add to this, I'll be glad to answer any questions at all that you guys have. Hopefully I've explained this well enough. And hopefully you guys know the difference between entering off of luck and entering off of skill, and pretty much not believing all the hype out there when people talk about sniper entries. Like, oh, I got a sniper entry. Like, yeah, okay. How long were you in that position? But before it eventually took off. Like, if you hit a sniper entry, boom, as soon as you hit it, you're in profit and you stay in profit. You don't fluctuate, with price coming up and down all around here. Like, no, I wouldn't consider that sniper entry. That's based off of your previous analysis and market structure, candlestick patterns, chart patterns, all of that stuff. Okay. So that's pretty much how I would classify what a sniper entry was. I don't know if Marcus has anything to add. If not, like I said, this is recorded for you guys. You guys can go back and watch this. We'll upload it to YouTube on our channel, S&M Trading. You guys go ahead and like, subscribe. We'll drop it in the Discord chat as well and the Telegram group. I know a lot of people couldn't make it on here, but for you guys that showed up, man, I appreciate you guys. I love each and every one of you. Me and Marcus are here for you guys whenever you need any type of help. Whether it's questions, whether you need a private session, you guys can send us your charts, send up your markups, whatever you need help with. Me and Marcus are 100% available, and we're more than happy to be able to help you guys out, get you guys to where you need to go in your trading journey. We'll be right there with you guys because we've been through everything you guys are going through right now. Maybe not, most definitely not in your personal lives or whatever you guys are going through, because everybody goes through different stuff. And I know a lot of us are going through certain things right now. I'm here for you guys whenever you need to talk, whenever you need even a shoulder to cry on, man. Me and Marcus are very approachable. We don't turn down anybody. We don't expect a certain level of like affirmation or anything like that. We're just regular dudes, highly approachable. We care about you guys. We wish you guys the most success for you and your families. And like I said, we just care and we just want to help people. So whenever you guys need to call somebody, whenever you need a pep talk about something, doesn't even have to be about trading. It can be about whatever. We're there to listen. Okay, we're gonna be there with you guys. We're gonna help you through it as best we can. So I'm gonna go ahead and close this out. This will go ahead and conclude the sniper entry educational session from S&M Trading. I appreciate you guys being here, and we'll see you guys in the chats tomorrow. We're gonna have our New York session at 6 and our Asian session at 4 p.m. PS time, or PST, PS time. Okay. So, But yeah, other than that, if you guys have anything else, just hit us up in the chats. We'll get back to you when we can. And you guys have a good night. Appreciate you guys. God bless.